Are you receiving PIP due to a disability and have questions about how it affects your taxes and debts? Then you're in the right place. Personal Independence Payment, PIP, is a type of financial assistance for individuals who suffer from long-term physical or mental health problems, which requires them to pay extra costs to maintain a standard of living. To be eligible, you must be 16 years or older and have experienced a disability for at least 3 months, with the expectation of it continuing for at least 9 more months. PIP payments come into 2 parts, the daily living component and the mobility component. How much you get will depend on your health, and the current weekly payment for the daily living component ranges from £60 to £89.60, while the mobility component ranges from £23.70 to £62.55. If you're looking to apply for a PIP, I'll leave a couple of phone numbers and an address in the description. If you've been diagnosed with a terminal illness, there is a way to speed up your application. Your PIP payments are assessed based on how your condition affects your day-to-day living, and this is determined by a health professional. PIP has replaced Disability Living Allowance, that's DLA, for most people. But if you're under 16 or born before April the 8th, 1948, you may still receive DLA. PIP is classified as a benefit, but it's different from all the other benefits because it's not income-based, and you'll receive it no matter how much savings you have. If you're setting up a debt management plan, a DMP, you can either include the PIP as income, but also include the expenses that you're frequently paying for from the funds that you receive, or not include the PIP as declared income, but also not include the living expenses and costs associated with your disability. If you're applying for a more formal debt solution, such as an IVA, individual voluntary arrangement, you should consult with an insolvency practitioner. PIP is not subject to taxation and you'll not have to pay any tax back on it. It's not classified as income for council tax purposes, and you might be eligible for a reduced rate of local authority tax. If you receive certain benefits such as income support or universal credit, you might be eligible for a top-up payment. Whether or not you use PIP to pay off your debts is your decision. But if you're setting up a DMP, it's a less risky option as you can change it if your situation changes. For more information on debt solutions, I've linked to a form on my new website below the video. It's got a few multiple choice questions like how much debt do you owe and how many people do you owe? At the end of the form, it'll connect you to a company that I've partnered with to provide you with all the information that you need about debt solutions. So click the link below, go and check it out and let me know how you get on.